Hey everybody, thanks for tuning in for our second Technical Tuesday post on the Futures Radio Show blog. This week on the show, I am excited to bring you my friend, Tony Greer. Quick background on Tony. He was a currency and commodities trader for Goldman Sachs and UBS, an equity sales trader, and is now the founder of TGMacro and a contributor to Real Vision. In this post, we discussed how Tony learned about technical analysis. He shares with us his favorite technical indicators, how they give him an edge, and his process for entering and exiting trades. Now, before I send you to the interview with Tony, I want to mention the technical analysis guide done by RJO Futures in this post. I have it downloaded on my desktop, and it's a great resource for the basics of technical analysis. If you're interested in learning about technical analysis, or a veteran like myself that likes to have good resources for the basics of technical analysis, I highly recommend you download this free PDF in this Technical Tuesdays post. Now, without further ado, let me take you right to the interview with Tony. So, Tone, how did you go about learning about technical analysis?
Actually, my very first job on the street, Anthony, I worked for a forward yen trader named John Spallanzani, and I was really learning a lot from the guy. And I was kind of an assistant forward trader at Sumitomo Bank, and I really wanted to learn what the very basics of where do I start learning the first thing about trading. And he started going over, how technical analysis was a useful tool for him. And then actually the second year that I worked for him, it was Christmas time, and he came in and he dropped Murphy's Technical Analysis on my desk, and he said, "Merry Christmas, brother." And I thought that was really nice of him. And I peeled through basically the entire book, and I earmarked it and highlighted it and took notes on it. And really just now, 25 years later, I sort of cherry pick the things that I learned from that book, because I found that over time, certain things you get, certain tools you get comfortable with, certain tools you kind of let go by the wayside, and you kind of just go with fits your brain properly.
I mean, that's a thing, I think, for a lot of new traders that come into this business. They see an overwhelming amount of different tools, and they don't know which ones that they should be using. So for new traders, what would you recommend them going about learning about technical analysis?
Well, I think technical analysis is really an elongated study of daily price action. So for young traders, I always recommend, you're watching your stock every day. Write down the price action. Is it trading well? Is it trading poorly? Is it reacting well to news? Is it reacting poorly to news? I feel like becoming an expert in price action is the first step to becoming good at technical analysis. I feel like that needs to be something that you got to get used to. Reading the tape is still, an age-old skill that will probably never go away. And that's a skill that is sort of the platform beneath which you can lay over the technical analysis. And the technical analysis for me is more of a timing tool, and a sort of tool to find levels in stocks that it makes sense to get in and out of.
You're someone, Tone, that trades both stocks and futures. Do you find that once you've learned technical analysis, it doesn't matter what market you're applying it to? It's just whatever tools you're comfortable with. You're not changing technical analysis tools from stocks to futures.
Yeah, absolutely. Absolutely, Anthony. Sometimes somebody will throw me a chart in an email, and I will look at it and be like, wow, what is that? I've got to buy it, and you don't even know what it is yet, but you look at a formation. Sometimes it's got a big, long consolidation, and then all of a sudden there's a big, huge volume day and a big up move or down move, and you're saying to yourself, wow, this thing is about to get on its horse and go somewhere.
Yeah, I mean, I can relate to that too. I mean, to me, once you learn technical analysis and you're comfortable with your strategy, like nowadays I trade cryptos, and I'm using the same strategy that I use to trade futures to trade cryptos.
Yeah, it's pattern recognition, right? And it's you get in your mind the number of in your head you've got buried sort of all of your history in trading these patterns and all of the results. And every time you trade a similar looking pattern, you've got that mosaic of experiences under your belt that said, hey, last time I bought this pennant, I wasn't smart enough to get out quick enough because, it broke and then it broke back. or then the last time I traded this pennant and it broke out, I should have been doubling down when it had its second big day. So you kind of learn all these different scenarios and you see how the stock reacts when you're in it, and that kind of guides your next move, if that makes sense.
Yeah, no, it does. So, Tone, what are your favorite technical analysis tools and why?
Yeah, I have to say, I'm a big moving average guy because, I'm a big guy, a big momentum trader. So when I see things running above moving averages, I identify them as bull trend trades. And I see things traveling below all their moving averages down and to the right, I call those sort of bear trend trades. And it's always starting with what's the trend, right? When you're starting off with technical analysis, if anybody puts a chart in front of me that I don't know what it is and they want my opinion, the first thing I have to do is saying, okay, what's this thing doing? Is it trending higher? Is it trending lower? Or is it going nowhere? So that's the big thing, is establishing trends. Then as far as tools on the machine, the moving averages are really good to see, how strongly, a security is trading. If it's staying well up above the 50-day or the 20-day, it's probably rallying sharply. And if it's pulling back to a 200-day, then it's a much less steep path. But those moving averages are there. They often become self-fulfilling prophecies. So I like to use those to sort of scale into positions. And I'm really, when it comes to finding a pressure point in stocks, I find that trend lines work the best.
So, Tone, what moving averages are you using, and what is your favorite time frames, chart time frames?
Yeah, I'm usually I always say, Tony, I'm a 2 week to 2 month type of player. And I find that works well with the moving averages that I trade off of. I have been looking at the 50, 100, and 200 day since I got into the business in 1990. And I think it's just by habit that I've stayed with those. I know that there are all sorts of different numbers that different people like to follow. But I think it's the same kind of thing. When you get used to optically following the same moving averages and see how they sort of, fan out as a security starts to rally, and then they compress as it starts to consolidate. It's just getting used to how they relate to one another and how they relate to the security price. So I feel like it's a kind of a fair game to say, listen, you can pick whichever moving averages you want, but stick with them forever and don't change them.
So here's my question for you. Moving averages, you mentioned, and trend lines, they're pretty much the most common tools out there. So obviously you feel you have an edge when you're using these tools. Explain to everybody out there how you feel you have an edge in your strategy by using moving averages and trend lines.
Yeah. Okay. So I can walk you into a specific sort of trade that, I gave a presentation to Real Vision on the strength in the trucking industry. And behind the scenes, I invested my own money. I didn't know which trucking company to buy because they're all in pretty steep uptrends. Given we're seeing a fairly strong economy in the U.S. We've got a major uptick in freight in the U.S. So the trucking companies are doing really well. And when I started reading about how tight the trucking industry was getting, obviously I'm going through these charts and I see all charts in uptrends. I'm looking at JB Hunt, I'm looking at Werner, and I was looking at Landstar, and I see 3 stocks in uptrends, 3 stocks that are consolidating. So I took my pile of money that I wanted to invest in the trucking space, and I bought all 3, right? What I did then was I watched them really carefully. I think I made this purchase around the end. I think it was at the end of summer, through the summer, and they all really consolidated, all 3 names. And then I had Landstar break out of a pennant to the upside. And immediately, while the other names really weren't doing much, I mean, JB Hunt and Werner, they were trading back up toward the top of their range, but they weren't breaking out. So what I did was I cut those positions in half and I put the money in Landstar. It is not rocket science by any stretch of the imagination. It's really nuts and bolts trading, but it gave me the opportunity to be in Landstar from the beginning. It gave me the opportunity to add to Landstar when it broke that flat line top. If you look at the chart, you'll see there's a sort of flat line top around 116, 118. And when it got up above 118, I cut my positions in the other 2 and I added to Landstar because I said to myself, this price action is indicative of a stock that's breaking out. And so now I've got a pretty good average. I made my first entry into the stock around 113. I added at 118. It settled at 124 last night. And so now I've got a couple of good options. I can either really be conservative with it and drop my stop down below the 200-day moving average at 109.70. Or I could be really aggressive with it and stay long this and say, you know what, on a stop on a trade back below on a trade back below yesterday's low, for example, below 119.60, I'm out. This way, at least I know I've locked in a profitable trade at some level. I protected the money that I took out of the other stocks and put in Landstar. And it just makes me feel sleep really well at night with a little bit more money in that name, knowing that it's broken above this pattern after consolidating for about 9 months.
So just so I'm clear, so the reason why you feel that you have an edge when you're using moving averages and trend lines is because it's bottom line is identifying trend. You can tell when a market is trending in a direction, you are then, executing in that direction, whether it be a bull or bearish trend. And when the market starts to get sideways, then you basically are staying away from them and looking for, markets that are in trends. Is that what you're saying? Is that how it gives you an edge?
Yeah. My idea is that when identifying, a security and analyzing a security, the first thing you do is identifying the trend. And then I'm kind of using those moving averages as the tools that I need to show me when I can get back in. For example, if I'm looking at the Landstar chart, just to stay on the same topic, and I want to buy it, I'm looking at this thing and I saw it already consolidate for a year and already break out. Okay, now I can go back to my technical analysis toolbox, draw some trend lines, draw some pennants on this topping pattern, and see exactly where I want to buy it on the pullback. And it's going to be a double confirmation now, because that trend line is going to come in somewhere around the moving averages, and all that gives me is a really good. It just gives me the right risk reward. If I'm patient and I wait for the pullback to the moving averages, I can put a stop below it. I can I can look for a nice chunk of profit to run above that level. And it really just takes the emotion out of the trading and makes it a binary decision.
Yeah, and you do the same thing that you're doing with futures, because I know that you have been on the show a couple times before on Futures Radio Show, and we talked about how you were staying long oil for a considerable amount of time. So I guess what I'm interested in learning more about you, Tone, is what helps you determine that's the style of trader that you were going to be. I mean, because to me, you're someone who sits on positions, you're holding positions, whether it's futures or stocks, for good periods of time. It's the exact opposite of the way that I trade. The less amount of time that I'm in, the better, really. For you could actually sit through it and sit through these trends. What helped you decide that that's the style of trader you were going to be?
Everything at Goldman Sachs that we did on the commodity desk was based on the chart. Whether it was trading flat price gold or oil, whether it was trading the spreads, whether it was trading, physical contracts of anything, it was always, you can't trade anything unless you look at the chart and have some idea where it's been. Right, you have to have some knowledge of price history when you're setting foot into a new arena. So, once that becomes a sort of necessary step in your analysis to everything, you can't do any trading without a chart anymore. And I guess learning as a commodity trader, there's no CFO or CEO to talk to get information about what you think about the stock. So commodity traders are just looking at price action and using technical analysis. So I think that was what moved me into it. To start, and I started using that overlay in the equity market, and I liked it quite a bit, because the commodity markets would sometimes, and often do now, lead the way, and then the stocks will follow, but you can apply the same technical analysis to the commodity and the stocks, in the exact same way. So it's kind of a double barrel thing, if that answers your question, where you're constantly, you're putting these two sort of themes together with sentiment and deciding where you want to trade. Now, it's always been the type of thing where I'm a momentum trader, because the best trades that I've ever had in my life are trades where I'm adding on with house money. And I use that 2 week to 2 month time frame, because that's sort of my survival. That's usually my survival window for a security. Like when I got bullish in crude oil back in the summertime down at the lows, It was well, actually, I got bullish in the crude oil back down to 25.30, but for different reasons. We got another dip back down in 2017 into the moving averages around 50. And as it started getting above the moving averages, we started seeing massive export demand. The curve steepened. Everything about the crude complex, it made sense to be long. And so now as a technician, I'm looking at this chart and saying, I've got these guys now because crude oil will barely pull back into moving average support. When you see all the bears taking a shot at it at the run up, and it pulls back, and it doesn't really give them bears a good chance to get out. It pulls back to moving averages and it gets going again. And, so far that's still been the case. I'm a little bit less bullish crude oil now than I was 3 weeks ago, because now we've got a potential little bit of a topping pattern in the rearview mirror here. And we did the first little tap down on the 200-day moving average when it traded down to 65 a couple of weeks ago. So now we're starting to sort of chip away at the 200-day moving average, and it's got my radar up because, want to crash through there, I'm going to want to be out of all of my length. And so I've already begun, getting rid of a little bit of the length, and I'm trying to, figure out what I'm going to do with the rest of it. The beauty is I could always buy it back if it holds the 200-day, but I'm going to tell you, on a break below 65 and a quarter, the next time down, I'm a little bit concerned because there's a little bit of a risk-off feel to the markets now with the S&P backing off the highs.
So just going back to what helped you determine the style of trader that you are, bottom line is you're comfortable with these longer term trends. You feel like you have a much better edge in what you're seeing through your technical analysis and your execution to trade on a longer time frame.
Yeah, I feel like once I raise my stop tone, I've won. Once I sort of raise my stop from losing money to a break even, I feel like I've won on the trade, right? Because now I've got a free look. It gets back to my level, I get out. And if this thing starts trending and really trending, then all I got to do is keep moving up my stop and protecting profit. And as you know, the trends can go on a lot longer than people can stay solvent. And so when I find myself through that 2 week to 2 month sort of time frame, and I'm still in the trade and it's going my way, then I'm kind of sitting back with my hands folded behind my head and my feet up on the desk saying, okay, man, this thing is going to trend. If it's going to take me out, my stop loss is below the market. Come and get me. And then that becomes an easy trade, man.
Let's walk through an entry. We talked about moving averages and we talked about trend lines as your favorite tools. Take us through a situation to where, we could go back to that crude oil trade. I think it's very simple. Everyone can relate to crude oil, where you saw something on the charts and now you started to execute. What was the signal, and then how did you go about entering?
Can I switch this trade to emerging markets, because I feel like it's a great illustration of it?
Sure.
Okay, so I had a view that the dollar was going to be extremely, extremely strong and that it was going to do damage to the other currencies. I had this view way earlier in the year. I had it early in the Trump administration, and I had it as soon as yields started going higher. So now I'm looking at emerging markets, the EEM ETF, and I've been watching it. I watched it peak in January, and I'm looking for it to curl over. So a prime example is when it broke down through its 200-day moving average back in May. I sat and watched it. And I said, there's going to be a big test on the upside, and then it's going to fail again, because I am so bullish the dollar that I think it's going to derail this whole market. And then in the end, at the beginning of June, if you look at the emerging market EEM ETF chart, you'll see one last gasp up to the 200-day at $47, and that's where I put my first short on. Like I'd watched the thing and I didn't want to short it above the moving averages, because to me that's too dangerous. I have no idea when that trend is going to end. But once it curls over below the moving averages, it starts proving me right. Now I just got to find an entry point, right? So now as it curls down, it's following the 50-day moving average down, and then it has one last gasp where it trades right up to 200 DMA resistance. That's where I put my short out, and I got really lucky because it collapsed from 47 to 42 in the following 2 weeks. But that was a classic example of being patient, waiting for the retest, getting a confirmation that the trend was changing, and then we got it breaking down through a trend line 2 weeks later, and I waited for the next rally and I added. Like I didn't really get too cute. I just waited for it to back off of that hysterical low down at 42, and I added it, and now we're back below 42 again. So the way I see it, I'm seeing the emerging market trade right because the chart is speaking to me. I've got the timing down, I've got the thesis down, and I'm just going to keep lowering my stop loss. Right now, my stop loss is above 44. And, I'm hoping that in a couple of weeks, I'm going to move it down to 42 and we're going to start making some real money on this trade. And it's all because I was patient enough and waiting for that retest of the 200-day to get in on the short side.
So just to be clear, you're a scalar in of trades. You're not all in all at once.
I am very rarely an all-in execution style. If it happens, it does happen quite a bit on take profit. I don't mind on a take profit when something gets to my level, patting myself on the back very lightly and saying, this trade got to where you thought. Let's not be a pig. Let's take the money and run, and let's just sell the position because that makes me feel good. That just makes me feel good, like a win, like a complete success. I don't like to have any casual positions, Tone. I don't like to sort of leave a third of a position lingering ever. If I put a third of a position on, that means the other 2/3 are going on that day. And then at the end of that day, I'll have a full position. And then on the day that I exit, I may get out in pieces, but I'm usually getting out all that day. And like I said, sometimes it's all out in one shot, especially if I'm long a security and it gets anywhere near my target on a gap open dislocation. That's when I'll sell the first print I see, the entire position, and not even look back. I'll turn the screen off.
So rarely all in at once, scaling in, you like to add to winners. If you reach a target that you really like, doesn't matter how long it took to get there, you might be all out, but a lot of times you're scaling out too. One question I have for you is, you talked about moving averages and trend lines, but how are you determining that target? Because if you're looking at moving averages and trend lines, they're not necessarily giving you targets. What are you using for analysis to give you that potential target price?
You are too sharp, Mr. Crudele. You are too sharp. You're absolutely right. You cannot get away with trading. You cannot get away with just taking profit if you're trading off of moving averages and trend lines. That's when I go to Mr. Fibonacci, our Italian cousin, who did all the tremendous mathematics and gave us all these awesome, mathematical targets for when a trend breaks. So with the way I'm looking at, for example, let's just go back to the EEM ETF right now. I'm looking at this move as from the bottom in 2016 at 27.5 to the peak in 2018 at 51, call it 52. To me, that is the segment of the trade that I'm shooting against. And that's why I've got a target of a 50% retracement of that whole rally, which comes in around $40. So that's what I was talking about. If it gets down there, that's when I move my stop down to 42 and we start making some real money. But using Fibonacci levels is really important to me. If I'm trading off of a head and shoulders, my target is usually going to be the same on the downside as the distance between the neck and the head, if you know what I mean.
Yeah.
So like, for example, if you flip over a head and shoulders, if you see a head and shoulders peak and you trade on the break of the neckline to the downside, usually if you measure from the neckline to the peak, you will get a fairly accurate target on the downside for how much lower that security can go on a break of a head and shoulders. So that's a big, a sort of measurement for me. And then a lot of times someone getting out might be a sentiment, it might be a sentiment driven decision that technical analysis can help, because it's kind of like one of those things when you start seeing, headlines all over the place along the lines of the way you're thinking, it becomes a little bit too popular and you say, you know what? The sentiment is extreme right now and it's totally opposite my trade, so I think I should participate. That's another thing that doesn't really fit into a technical analyst tool bag because you can't point to it, but it's one of those gut reactions when, man, this thing is getting so much negative press, and if I'm short here, I've got to have rocks in my head not to participate. So that's the sentiment that fits in alongside the technical analysis. The Fibonacci levels help. They help with both extensions and retracements. So for sort of breakouts and breakdowns, I can always use a Fibo tool to find a level there. And, I probably don't go very much beyond that.
I love it, Tone. You keep it very simple. Your analysis is always great. Thank you so much for joining me today on this Technical Tuesdays post. Where can people find you on social media, particularly Twitter, and give us a website to check out?
Yeah, that's really kind of you. I am highly active on Twitter at TGMacro, which is at TGMacro, and my website is www.tgmacro.com. You can see what products and services I have on there. You can learn about my history and see some customer testimonials for my products. And that's it, man. I can't thank you enough for thinking of me so highly in a trading capacity. I love being on your show.
Thanks for tuning in for Technical Tuesdays. Remember, if you're interested in learning more about the basics of technical analysis, or a veteran like myself who likes to have a basic technical analysis guide for referencing, please download the free technical analysis guide on our website under this Technical Tuesday post. Cheers, everybody.